Hey traders, today is Tuesday, February 24th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the Australian dollar. A 5-week advance does look a little vulnerable here. On the back of that rally that we saw right into the start of the year, it failed at a major technical confluence for the last 3 weeks. That's the 2023 high close and the objective 2022 swing high from August. It gives you a range of 71.08 into 71.36. We've been trying to push through that for the last 3 weeks. Uptrend resistance converges on that same level and has capped the advance. So near term, while we're still constructive within the broader advance, there is a vulnerability here. If we look at the last few times we saw a 5-week advance or more, the first one was right here in 2024. In that instance, it was a 5-week rally that saw a pullback of more than 6.3%. Privy to that was a 6-week rally, and that called the highs for 2023. And then previous to that was the 2021 October rally, and that saw a 7% decline off the highs. Not a reason necessarily to get bearish, but certainly temper our expectations on the long side. And in the near term, it does leave a vulnerability for a bit of a pullback here in Aussie off of resistance. Now, we do get some key inflation data from Australia later today. We'll go over that in a moment. But some key levels to keep in mind. The broader trade still remains constructive while above 69. 69 is just the objective high close from 2024. It puts you right on the median line here of the next few weeks. And that's the level that would need to hold for the bulls to maintain control and for the broader bullish structure to remain viable moving forward. A topside breach of this key region opens up a critical zone of resistance right into the 72 handle. You're looking at 72.13, 72.07. That's the 618 retracement from the decline off the highs you made in 2021. And that would be 2 equal legs off of last year's rally right there. Favorite fib confluence is right at 72, just above the 72 handle. So that's all from the weekly chart. Now, if we drive down to the daily chart, a couple of interesting things come into play. So this is the same formation. You can see that we tried to break through that upper parallel earlier in the month, failed, pulled right back below, and yesterday we tagged it as resistance again. So again, on the near-term front, there is a threat just for a kickback within the broader uptrend. Support comes in at 69.80 into 69.62. That's the 38.2 retracement of the year-to-date range. Okay, so that's the whole January, February range. And it's 2 equal legs off of this most recent high. So both of those levels converge on the objective February open, which is what these dots are right in the middle at 69.64. So a key range of support we'd be looking for there. Again, the 2024 high day close, we looked at the high close on the weekly chart, comes in at 69.13. On the weekly chart, it was right there at 69.02. So again, some nice symmetry as you head towards the median line and the monthly range low. So drill down even deeper. Oh, by the way, one more thing. The RSI has now broken. We had some strong divergence on that last high. RSI has now broken a support slope that we've been watching, a 3-point slope. And again, we tested it as resistance yesterday before pulling off. So leaving that threat for a little bit of a recovery here in the dollar, a little bit of a pullback in the Aussie. Here's what the 4-hour chart looks like. I've been working with a couple different slopes here. Basic channel resistance converges on this year's high day close, as well as last week's open. That gives you 70.90 into 70.96. That's near-term resistance. The lower parallel converges on upslope support right at the 70 handle over the next few days. And again, just below that is that key confluence support slope, or that key confluent Fibonacci region we just talked about. One other slope I was considering as well is too early to rely on, but a basic pitchfork off the high-low high does have this pretty decent slope in play, and again, continues to highlight the 70 handle, first as initial support, and then again, that key 69.80, 69.62 level, that 69.13 level, the 2024 high day close, converges on the median line over the next few days into the close of the week. We would need a breach above that 70.96 region to mark, at least to dissuade this near-term downtrend. Ultimately, you need to close above that 2023 close high at 71.36 to clear the way, okay? And then that 72 region is absolutely paramount on the upside. So if Aussie is heading lower on this stretch, rallies should be limited by 70.96, 69.80, into 69.62, and 69.13 should be the limit. Both of those are levels of interest for possible exhaustion. Might be a good reset for the longer uptrend. What else? CPI data later today. Later tonight, early tomorrow in Australia, we are looking for the consumer price index to come in at 3.7% versus 3.8%. So the trimmed CPI, the core CPI is expected to hold 3.3%. Remember, the markets are expecting the RBA to hike rates further this year. So again, that interest rate disparity with the US dollar and the monetary policy outlook is going to continue favoring the Aussie in the longer run. We're just concerned that near term, you might get some of that kickback within the uptrend. We'll try to keep you updated as always on X. Till then, best of luck trading, and we will see you tomorrow. Cheers.